Welcome back to DrEasyFinance, the channel that makes money simple and results real. Today, we're going to break down one of the biggest misconceptions in personal finance, that you need a lot of money to start investing. Here's the truth. In 2025, you can start with just $100. That's right, one crisp Benjamin Franklin. And if you understand how to use it the right way, that small amount can become the foundation of your long-term wealth. Most people never start because they wait for the perfect moment. They think, I'll invest when I make more, or when I understand the market better. But the perfect moment doesn't exist. The best time to start investing was yesterday. The second best time is right now. So, in this video, we'll go step by step through everything you need to know. First, the myth that keeps people broke. Second, real options for investing just $100. Third, a simple strategy anyone can follow. Fourth, a realistic simulation of what that could become. And finally, my top 5 rules to help you invest confidently in 2025. If you're ready to make your money work for you, let's jump in. 1. The big money myth. For years, investing seemed like an exclusive club. You needed a broker, a ton of paperwork, and usually thousands of dollars to get started. But that was the old world. Before fractional investing, before no-commission platforms, before technology leveled the playing field. Now anyone with a phone and an internet connection can own pieces of the biggest companies on the planet. You can buy $20 of Apple, $10 of Tesla, $5 of Microsoft, and build a diversified portfolio without ever leaving your couch. The biggest lie people believe is that you need a lot to start. The truth is, you just need to start with what you have and keep building. Because money grows through consistency, not size. Think about it this way. $100 sitting in a savings account earns maybe 0.5% a year, if you're lucky. But that same $100 invested in an index fund earning 8% a year doubles roughly every 9 years. That's the power of compound interest. It's literally time working in your favor. Investing isn't about luck, timing, or insider knowledge. It's about direction, patience, and persistence. 2. Real places to invest $100 in 2025. Let's get practical. What can you actually do with $100 today? Here are 5 legitimate, beginner-friendly ways to put that money to work. Option 1. Fractional stocks. Apps like Robinhood, eToro, Public, or GBM Plus let you buy fractions of shares. So instead of needing $500 to buy one full share of a company, you can invest as little as $1. This means you can own a slice of companies like Apple, Nvidia, or Amazon. Real ownership, real dividends, real growth. Option 2. Index funds and ETFs. If picking individual stocks feels intimidating, go with index funds. An ETF like VOO or SPY tracks the S&P 500. Basically, the 500 biggest and most stable companies in the US. Over the last century, this index has averaged returns of around 8 to 10% annually. That's the simple, boring strategy Warren Buffett recommends to 99% of investors. And it works. Option 3. Crypto core holdings. Now this one comes with a disclaimer. Volatility. But used smartly, crypto can play a small role in diversification. Put maybe 10% of your portfolio, so $10 out of that 100, into long-term assets like Bitcoin or Ethereum. These are the blue chips of crypto, with real-world use cases and limited supply. Ignore hype coins. Focus on assets that have survived multiple market cycles. Option 4. Government bonds or CETES. If you're in Mexico, you can invest in CETES Directo starting at just 100 pesos. If you're in the US, short-term treasury bills currently yield between 4 and 5%. These are essentially loans to the government. Low risk, predictable returns, perfect for beginners. Option 5. Real estate crowdfunding. Thanks to platforms like Fundrise, Realty Mogul, or 100 Ladrillos, you can invest in real estate projects with small amounts. Your $100 becomes part of a larger fund that earns rental income or property appreciation. It's a way to get exposure to real estate without needing to buy or manage an entire property. Each of these options comes with different levels of risk and reward, but the key is that all of them are accessible. You can literally start investing before the end of this video. 3. The strategy. The 3 C's of wealth. Now that you know where to invest, let's talk about how to invest. Because putting money somewhere once isn't a strategy. It's an experiment. The method I teach is simple. The 3 C's of wealth: consistency, control, and compounding. C number 1, consistency. Investing once doesn't change your life. Investing regularly does. Decide on a fixed amount, maybe $20 a week or $50 a month, and make it automatic. Consistency beats intensity every single time. Even if the amount feels small, those small deposits add up faster than you think. C number 2, control. You can't manage what you don't measure. Track your investments with tools like Notion, Fintonic, Personal Capital, or a simple spreadsheet. Know exactly where your money is, how it's performing, and what fees you're paying. This gives you confidence and keeps you from making emotional decisions when markets move. C number 3, compounding. This is where the magic happens. Every dollar you earn in gains or dividends should be reinvested, not withdrawn. When your returns start earning their own returns, your growth curve shifts from linear to exponential. Albert Einstein famously said, "Compound interest is the 8th wonder of the world. Those who understand it, earn it. Those who don't, pay it." And he was absolutely right. 4. A realistic simulation. Let's make this tangible. Imagine you start with $100 and add $25 every month. That's $300 a year. At an 8% annual return, after 5 years, you'd have around $1,880. Not bad. That's an 80% profit on small, consistent contributions. Now stretch that to 10 years. You'd have about $5,600. Keep going for 20 years and you're over $17,000, all from small, steady investments. And here's the best part. By then, you'll have built the habit. The habit of investing automatically, of thinking long-term, of letting time and patience do the heavy lifting. This isn't about getting rich quick. It's about getting rich eventually. The slow, steady, unstoppable kind of rich that comes from good habits and discipline. Every investor you admire, from Warren Buffett to Charlie Munger to Jack Bogle, started small. They just never stopped. 5 rules for investors in 2025. Let's finish with 5 practical rules that will keep you on the right path. Rule 1. Start now. Waiting for the right time is the fastest way to fall behind. Time in the market always beats timing the market. Rule 2. Diversify. Never put all your eggs in one basket. Hold a mix of stocks, ETFs, maybe a little crypto or bonds. Diversification smooths out volatility and protects your peace of mind. Rule 3. Keep learning. Spend at least 30 minutes a week reading or watching credible finance content. Knowledge compounds just like money. The more you learn, the smarter your decisions become. Rule 4. Avoid bad debt. Don't invest with credit card money or loans. High-interest debt cancels out investment gains faster than you can make them. Focus on paying off toxic debt first, then channel that freed-up cash flow into investments. Rule 5. Think long-term. The market rewards patience. Short-term drops are opportunities, not disasters. If you believe in what you own, hold it. Your future self will thank you for not panicking when everyone else did. 6. Building the investor mindset. Let's take a step back from numbers for a second and talk about something that separates successful investors from everyone else: mindset. Because here's the truth. Most people don't fail at investing because they pick the wrong stock or the wrong ETF. They fail because they quit too early, they panic when markets drop, or they never build the emotional control needed to let their investments grow. When you invest, you're not just buying assets. You're buying patience. You're buying the discipline to stay calm when everyone else is fearful, and the confidence to stick with your plan when social media screams crash or bubble. Every experienced investor goes through the same emotional curve: excitement, doubt, fear, regret, and finally, growth. It's a cycle, and if you can recognize it early, you can learn to ride it instead of fighting it. Let's look at a real example. If you had invested $100 in the S&P 500 index back in 2010, through all the ups and downs, the Euro debt crisis, the 2020 pandemic crash, inflation fears, interest rate hikes, that $100 would be worth over $450 today, even after corrections. Not because you timed the market perfectly, but because you stayed in the market consistently. That's why the best investors treat the market like a long-term relationship, not a fling. They know there will be rough weeks, even rough years, but they stay committed. And that's what gives compounding time to do its job. So when you invest your first $100, you're not just starting a financial journey. You're training your mindset. You're developing the ability to be rational when others are emotional. You're learning to think like an owner, not a consumer. And that mental shift is what eventually separates people who worry about money from people who make money work for them. Here's the mental framework to remember. Step 1. Accept that volatility is normal. Markets rise and fall, but history shows they always recover. Step 2. Focus on time in the market, not timing the market. Step 3. Celebrate the habit, not the dollar amount. Every time you invest, even $5, you're reinforcing the identity of an investor. And identity creates momentum. So don't underestimate the psychological power of that first $100. Because it's not just an investment in your portfolio, it's an investment in the person you're becoming. Starting with $100 might not sound life-changing today, but it's the mindset that changes everything. Because once you realize that wealth isn't about the amount, it's about the habit, you stop waiting for opportunity and start building it. So take that first step. Pick one platform, one asset, one goal, and commit to consistency. It's not about being perfect. It's about being in the game. If this video helped you see that anyone can start investing, yes, even with just $100, make sure to like the video, subscribe to Dr. Easy Finance, and share it with someone who keeps saying they'll start later. Here at Dr. Easy Finance, money isn't complicated. You just need to understand it easily. Dr. Easy Finance. Simple finance. Real results.